What's up, Miami? It's Raul Crespo, your local real estate expert, and you're watching another episode of Real Talk 305. Today, we're going to talk about how you can purchase an investment property, build your wealth, and save on your mortgage at the same time. Stay tuned. Do you want to purchase property, build your wealth, get cash flow, and save money on your mortgage every month? Okay, check this out. This is called house hacking, a coin termed by a gentleman named Brandon Turner at biggerpockets.com. Brandon is a seasoned real estate investor who also is the host of the Bigger Pockets podcast. If you haven't checked it out, I highly suggest it. Brandon, if you ever see this, you're the man. So house hacking is basically when you purchase a property and live in a portion of it, take advantage of a owner-occupied mortgage so that you can put less money down, and then rent out another portion of the property in order to offset and sometimes even completely negate your mortgage and make a profit. Now, we're going to talk about a few different ways that you can do that. Number one, the most basic house hack that you can do, let's call it the luxury house hack. It's going to be the least amount of money for your bang for your buck. And this is where you basically purchase, let's say, a single family home with a garage, and you convert the garage to an efficiency, and you have someone move in to the efficiency. There are also properties in Miami and other parts of the country that have what you would call an auxiliary dwelling unit or an additional dwelling unit, which is a detached building on the property that you would call something like in-law quarters or a guest house or something like that. That would be what you rent out. You live in the main house, you rent out a little bit. You're not going to cover your expenses, but it will reduce the cost, and you will be able to live for less on the same kind of property, or afford more if you think of it the other way around. So that's way number one. Way number two, this is what I would call let's say a traditional house hack. So a traditional house hack is when you buy a multifamily property, in this case a residential multifamily, which is anywhere from 2 to 4 units, aka duplex, triplex, or fourplex. You live in one of the units and then you rent out the rest. Simple as that. A lot of times you can find multifamily properties that do cash flow and can get you some good return on your money. So that's definitely a really, really good option, the traditional house hack. We have number three. This is a bit more of an aggressive. It's called the roommate, or I call it the roommate house hack, where you purchase a home or a condo or another type of property that is just a single dwelling that has multiple bedrooms. You live in one of the bedrooms, maybe the master, maybe the guest room, depending on what you want to do and how aggressive you want to be. Some people even live in the living room. I think Brandon Turner did that. So you rent out the other ones. Now, this is cool because you can have a lot more leeway with who you want to be living in your dwelling with you, because of the fact that they're your roommates. A lot of the same like landlord and tenant protections don't apply. So it's really hard to get like squatters and stuff like that. It's easier for you to let people know, hey, I don't really want you living here anymore if things don't really go the way that you want them to. So that also has a higher potential to cash flow, because you can charge more for someone to rent a room in a property than you would be able to charge someone to rent an entire property as a percentage of what it's worth. Then there's the super aggressive house hack, the mobile home house hack. So this is one where you could get a single family home in a part of the county that doesn't have like strict HOA, where you can't have certain types of vehicles or boats or stuff on the side of your house, and you get a camper van and you park the camper van on the side of the house and you live in the camper van and you rent out the single family home. Now, this is pretty hardcore. Not everybody's built for this kind of stuff, but it has potential for some crazy cash flow. So definitely something to consider. So now that we've talked about all the different types of house hacks, let's talk about some of the benefits of house hacking in general. So house hacking, and in general real estate, has 4 main ways of building wealth. Now, we've got appreciation, which is when you purchase a house at a certain price, and over time that value increases with the market. We've seen that there are ebbs and flows in the real estate market, but historically, over time, on average, there has been an increase. It's just money that's going to be in your pocket in the future. So appreciation is number 1. Number 2 is cash flow. And cash flow, as I said before, you're not probably going to see it in the luxury house hack, but you would probably see it in the standard house hack, and definitely in the roommate house hack or the trailer house hack. And that is basically, you cover all of your expenses, you cover your reserves, you cover your monthly expenditures, and you're left with money at the end of every month. on top of what your expenses are from the rental income. That is what you call cash flow. So that is way number 2. Number 3 is loan pay down. So when you have a tenant living in your property, they are covering, if you're not upside down on the house, or if the rental market will bear the right price, which if you're doing your research, it should always do this, then they're going to be paying down your mortgage for you. And by doing so, you're going to automatically, unless the market tanks, which as of right now, we are not seeing a lot of risk of that, thank goodness, you'll be able to continually gain equity in the house. So that's way number 3. And way number 4 is tax benefits. So you have a bunch of different things. Now, I'm not a CPA. Don't take this as advice. I'm just telling you some basic top level knowledge, and you can talk to a certified accountant for the details. But you've got interest write-offs, you've got depreciation write-offs, you've got stuff like a 121 code exemption, which is when you own a property for 2 of the last 5 consecutive years, you can actually sell there has to be a property that you've lived in for 2 of the last 5 years. Then you can sell the property tax-free. Completely tax-free. No deferment, don't pay it later, tax-free. So a 1031 exchange is when you take the proceeds from the sale of an investment property and you use it tax-deferred to purchase another property. This means that you're not paying capital gains taxes, and that is rolled over onto another property. So if I bought a house for $250,000, I sold it for $500,000, I have $250,000 to play with. I take those $250,000 in a 1031 exchange, I put them in an intermediary account. They're holding it for a certain period of time. I'm not going to get into the deadlines for it, but it's a certain period of time that I have to find and close on another property, a like-kind property that's at least that much or more, $250,000 or more, let's say in this case. And I then take those $250,000 and put them toward the purchase of the new property tax-free. So my point here is you've got many, many ways to make money off of one property. So why not get started as soon as you can? You can put 3.5% down on a multifamily home. You can put 5% down on single family homes, also 3.5% if it's the right price point. But my point is you can put very, very little money down and get yourself an investment property, rent out the other part of it, and live mortgage-free while building your wealth. That's the beauty of house hacking. If you have any questions about house hacking and you want to know a little bit more about it, my number is 786-360-9413. Just give me a call anytime. I'd love to talk more about it. Or visit my website at bestmiami.homes. Again, that's bestmiami.homes. Thanks so much for tuning in. Have a good one.